Coming up on Business Incorporated. South Africa Reserve Bank says risk of spillover Russia-Ukraine war could hurt the country's financial stability. Egypt gets extra $3 billion in Saudi financing to cope with wheat woes. An Africa Development Bank projects 5.3% growth rate for Ghana in 2022. Hello, welcome to the program. Great to have you join us. I'm Ladi Williams. First off, let's kick off with market numbers. Here in Africa, it's mostly positive sentiment for major bourses on the continent, starting with the Nigerian market, which crossed into the 53,000 point level again, gaining more than 1% at noon. Similarly, in South Africa, the GSE's main index was also up by more than 1%. On the other hand, the Egypt EGX market flopped by more than 0.5%, while Kenya was up 0.53% today. And let's move over to the Middle East now, which is also mostly in the green. Abu Dhabi was up 0.43%, and the Dubai index higher at 1.03%. In Saudi Arabia, the Tadawul index gained 0.56%, while the Qatari market index lost 0.23% at intraday's trading session. Moving on to Europe now. To turn itself into one of the biggest producers of semiconductors, now the bloc itself is endangered on reaching that target. We have Chris Kober joining us right now from Berlin. Great to have you, Chris. So the EU wants to invest billions of euros in semiconductor production facilities, but things don't seem to progress. Why?
Negotiations about the so-called CHIPS Act between the EU Commission and the EU Parliament are stalling currently. European Union leaders last month announced a 43 billion euro or $47 billion CHIPS Act to help the continent become a major semiconductor producer and curb its dependency on Asian markets for the components. Now, as we've learned, these semiconductors act as the electronic brains for everything from cars to smartphones and game consoles. Demand for chips has surged as the global economy bounced back from the COVID-19 pandemic, but supply hasn't kept up because of bottlenecks. Now, that's why the EU wants to double its share of global chip output to 20% by 2030. That means it needs to quadruple its current production facilities. In order to achieve this, Brussels will have to loosen the so far quite stringent rules about state subsidies. But as the EU Parliament has so far not given its thumbs up to the proposal of the Commission, it is completely unclear when, how, and under which conditions these subsidies can be handed out to companies. Also, this financial support is most likely linked to commitments, as the proposals of the EU Commission show. Chips manufacturers that have received subsidies could be forced to deliver to EU customers first in an attempt to brace the bloc for another shortage. However, these conditions are not going down well with the industry. Now, due to the current shortage of semiconductors, the German economy has seen a decline in revenue to the tune of 1.6% of GDP. That's according to Germany's BDI Industry Association.
Well, Chris, but what's the immediate impact of this holdup?
The immediate impact is that planning and further preparation of two large chip-making facilities in the east of Germany is put on hold. U.S. microelectronics heavyweight Intel announced that it'll invest some 17 billion euros or almost $19 billion in two new factories in the German city of Magdeburg as part of a massive investment strategy in a number of European countries. Intel has the largest share of the lucrative global market for semiconductors in personal computers and servers. The company has been asking for subsidies of more than 5 billion euros for the sites in Germany. The state government says they're optimistic that the money will be granted, but the final call is still pending, and there won't be one until EU lawmakers haven't made a decision. Construction of the factories in Magdeburg, which is some 120 kilometers west of Berlin, is to start next year, with completion expected in 2026. And this is a huge deal for a region that otherwise doesn't have much large-scale industrial production. And after all, it beat off competition from several other cities in Germany and beyond. Apart from the so far shaky financing, there is another issue that could hamper the EU's ambitions here. At the plant sites in Germany, Intel will produce the latest and most modern type of chips. Demand from European companies, however, currently exists for more mature technologies. So there are fears that once this site is operational, it might not help much in dealing with the current bottleneck.
Thanks, Chris. But let's take a look at the markets now. We saw, there was an upbeat sentiment yesterday. Was that carried into today's trading session?
European shares opened slightly higher on Thursday, helped by energy stocks on the back of gains in oil prices. But overall, sentiment remained subdued as major central banks signaled continued policy tightening to control rising inflation. Overnight, minutes of the U.S. Federal Reserve's early May policy meeting showed that people there believe in the strength of the U.S. economy. However, Fed policymakers agreed to continue hiking rates by 50 basis points for the next 2 months to tame surging prices. The DAX in Frankfurt managing to stay above 14,000 points this morning and gaining around 0.3% in the early parts of Thursday's trading session.
All right, thanks so much, Chris Kober, right there in Berlin. Let's head on to the UK now, where it's all about the windfall tax. Let's bring in Juliana right there. Great to have you, Juliana. So the Rishi Sunak's controversial windfall tax should be out by now. What does it look like?
Good afternoon, Laddie. Well, after weeks and weeks of significant pressure, not just from opposition party members, but also from the Conservative Party's own backbenches, Chancellor Rishi Sunak has just finished delivering his statement. Some would have preferred a mini budget, but it wasn't that. However, the government have offered a £15.3 billion package worth of support to try and help struggling families through this COVID-19 package. It's just been released, so there's so much that I need to read through. But as you were saying, I think the biggest headline is the windfall tax. Now, the government have done it before. The Conservative government are not shy of doing it, but they have made a significant U-turn, and they have decided to impose a windfall tax on oil and gas giants. They stopped short from calling it a windfall tax, though. The Chancellor actually called it an energy profits levy. So this is going to be a 25% one-off tax that is going to be imposed on BP and Shell, because, of course, we know from data released a couple of weeks ago that they raised significant amounts of profits during the first quarter of this year because of the high commodity costs. And I believe that 25% is going to raise about £5 billion. How is this money going to be distributed? Well, for 8 million households in this country, they will be receiving a one-off lump sum of £650. This £650 is going to be paid in 2 instalments, one in July, one in August. So this is if you are on a means-tested benefits. As if you're somebody that does receive any sort of universal credit, you will be receiving this money, £650. Yes, that's about £275, £325. Oh my goodness, £325 you'll be receiving in July, and then you'll be receiving it in August. Also, as well, pensioners will be receiving an additional £300 on top of their already warm home discount in the autumn. There are some more numbers that I will have to crunch. Of course, the Labour opposition party were in absolute fits of laughter. There was lots of banter in the Palace of Westminster when the Chancellor was reading out his statement. Why? Because, of course, they have been asking for a windfall tax for months and months and months. And the Chancellor has been quoted, as we're used to seeing with this Conservative government, saying it wasn't good for investment in the country. There were 2 votes in the House of Commons just last week. The Conservative Party voted against imposing a windfall tax. So even though this is really important and it's a significant amount of money that the government are going to be trying to help to support families, people are
Quite
saying,
interesting.
why now? Why are you doing it now? Last week, you voted against some of these measures. The day after, the most senior civil servant in this country, Sue Gray, releases this pretty damning report about the Partygate scandals and the culture of misogyny and pretty shameful, debaucherous behaviour going on in Downing Street. The following day, you say that you're going to be using £15 billion of taxpayers' money, by the way, to help support struggling families. There's something not right about it. It does smell a little bit off. And the government and the Chancellor wasn't happy, of course. He is a multi-millionaire Chancellor, that the Labour Party was saying that he is completely out of touch with working class families in this country that are struggling. But as I said, the statement has just been released, so there is more to come, and hopefully we can crunch those numbers in more detail tomorrow.
Right. So much to unpack there, and hopefully this new support doesn't stoke inflation even more. Well, another news now, Twitter has been fined $150 million by U.S. authorities after taking users' private information, such as phone numbers, and so I guess it's a privacy issue. And interestingly, it's coming at a time Elon Musk is trying to buy Twitter. Quite interesting.
Yeah, it is a really interesting time for Twitter and the future of Twitter. Is Elon Musk going to or going not to take over the firm? We just heard this morning, a couple of hours ago, although I haven't managed to get a grip on the story properly, I believe Jack Dorsey, the former founder of Twitter, I believe, has stepped down from the board. That's breaking news that just flashed up on the wires a couple of hours ago. But yes, the US Justice Department and the Federal Trade Commission have concluded that over a span of about 6 years, Twitter failed in ensuring that 140 million users' data was used in an accurate way. Now, Twitter users, when you sign up, I've been on the platform for about 12 years, so I can't remember this now, but when you sign up, they do ask for certain information, including your postal address, as well as an email address, as you would expect. Now, Twitter have always stated that they use this data for security reasons, but alas, as I don't think many people will be surprised, this is not what they were doing with the data, or this is what wasn't just what they were doing with the data. They were also offloading that data to companies who were then putting adverts in front of you that they thought would appease you. Again, something that most internet users are used to, but it's illegal. And it's illegal if you are not telling users at the first instance that that's what you're going to do. So they have been fined this $150 million. And, you know, it has led to more questions about the future of the platform. We know that Elon Musk, you know, is a champion, as he would say, of free speech. Is content moderation going to become a thing of the past? We know, particularly if you look at what's happening or what's happened in America and Texas over the past 48 hours, it's places like Twitter that people go to for that fast, instant news. But if the content moderation and data privacy is going to be an ongoing issue, then perhaps, you know, the future of the popular social media platform isn't as assured as we would have hoped or anticipated.
Very interesting. Well, we'll keep tracking that deal to see if it eventually happens. Thank you so much, Juliana. We'll see you tomorrow.
Thanks, Laddie.
All right, we'll take a break now. When we come back, Commodities Market Update is next. Do stay with us. This is Business Incorporated. All right, now for Commodities Market Update. India, the world's largest producer of sugar, the second highest exporter after Brazil, has restricted the export of sugar. Days after it banned wheat exports. Let's talk to Ifeanyi Otisi now, analyst at financial derivatives company. Great to have you, Ifeanyi.
For having me.
Right, so what is the impact of this restriction on the global sugar industry? How would this affect, you know, Nigeria, especially food inflation, which is currently at 18.37%?
So India has placed a restriction on sugar exports and has put a cap at 10 million metric tons for the current marketing year. Now, the effect of that is it's going to lead to supply shortage, it's going to lead to increase in prices, it's going to lead to increase in production costs as well globally. So we've seen that since Russia invaded Ukraine in February this year, there's been a global inflation spike. It's skyrocketed. So now what we've seen is countries are trying to either restrict the exports, food exports, or they outrightly ban food exports. And this is to ensure price stability within the country, or to ensure domestic availability of the product, or to ensure that prices don't go up. This is within the country. So now with India placing this restriction on sugar exports, we're going to see that countries who depended on India for sugar supply, basically, they would have to look for alternative sources, explore short-term supply agreements with other countries in the meantime. And then other countries now would now have to, after finding alternative sources, they would have to manage supply shortages, also manage increase in prices, manage increase in the cost of the byproducts of sugar as well. These are things we would expect. Now, coming down to Nigeria, there'll be a ripple effect as well. You'd see increase in importation costs, increase in sugar costs, increase in production costs, increase in costs of things like confectionaries, pastries, pharmaceuticals, and other products that are manufactured using sugar. So those are the things you would expect.
Quite interesting. Not a good time to be reliant on any country. Well, Nigeria's estimated aggregate demand for sugar is about 1.7 million metric tons per annum, but it's imported. Some are more imported to meet the demand. Also, Nigeria's sugar production is forecast to remain flat, in the year beginning of May 2022. What is causing this? What's responsible for this flat performance?
So there's several factors that would contribute to the flat performance. Unfortunately, that's where we are right now. This is a situation Nigeria has found itself. Some of the factors would include high input costs, lack of adequate infrastructure, poor infrastructure when it comes to sugar crushing operations, which is very vital. You'd see issues with insecurity that plague the country. So this would now deal with transporting the products from one part of the country to another. You're dealing with things like bad roads. We found situations where it's actually the investors who are now fixing roads or building airstrips just to ensure that the products reach them in the end. So you also see things like rising production costs as well, which will indefinitely, which would be a result as well. So these are some of the contributing factors that would have to consider. Now, all these factors will invariably lead to increase in overall production. It would impede production quantities. We would see or expect to see losses as well. These are things that we would have to consider in the long term.
Quite interesting. And the Nigerian government has, muted, discussions about the sugar tax, the sin tax. What do you think do you think this is actually a good idea at this point?
So I would take a different stance. So now the sin tax is levied on products that would have adverse effects on health of citizens. So you're looking at products like tobacco, products like alcohol, and then sugar-sweetened beverages. Now, the thing about sugar-sweetened beverages, which is our focal point right now, is that the Nigerian government recently announced that it would impose a 10% excise duty on sugar-sweetened beverages. And the rationale behind this is to curb consumption of these products so that health challenges or health issues such as obesity and diabetes will be reduced. Now, an idea also is that the taxes or the revenue generated from these taxes would be used to further develop the health sector. So we're looking at possible building or renovation of hospitals and health centers, purchasing of equipment, that will be used in the health sector. Now, the thing is, we've seen a situation where the Manufacturers Association of Nigeria have opposed this new development, saying that although the Nigerian government has cited or forecasted that we're going to see about 81 billion naira revenue from taxes generated, the Manufacturers Association of Nigeria has argued that the government failed to consider other factors. So, for example, the government didn't consider the 197 billion naira loss that would be incurred if taxes such as value-added tax is not taken into consideration. Furthermore, they've argued that there's a huge loss of about 1.9 trillion naira if sales revenue isn't, recorded if the taxes are imposed. So what I would say is, if you are towing the line of the Nigerian government and you're concerned about health benefits, then okay, fine. The excise duty is justified. However, if you're paying attention to the financials, if you're paying attention to how things work, essentially, with regards to payment and payment structure, then you pay attention to what the Manufacturers Association of Nigeria is saying. However, I'm of the opinion that if you focus on the fact that we have a 20% tax or levy on products like alcohol and cigarettes, right? It hasn't really deterred or stopped people from purchasing these products. I'll explain better. So you see people buying more bottles of.
Yeah. So if I so much to unpack there, this is all about food security, at this point. But I really enjoyed that analysis there. Thank you so much, Ifeanyi Otisi, analyst, financial derivatives company. We'll carry on with this commodities conversation another time. Thank you so much.
Thank you for having me.
All right, I'm moving on to other stories now. For Nigeria, the AFDB projects the average growth rate of the country's economy for the year through 2023 at 3.2%. The report also estimates the inflation rate to remain elevated at 16.9% in the year and stay above the pre-COVID era until next year. The report, which focuses on the growth prospects of the continent in the context of COVID-19, climate change, adaptation, energy transition, and other structural challenges, it says that the Nigerian economy will benefit from the high oil prices, recovering service and manufacturing sector, and government policy support for agriculture. In Africa as a whole, AFDB's acting chief economist and vice president, Kevin Urama, says considerable challenges remain in the medium term, which our governments need to address. Do take a listen.
Had the highest rebound, recording a growth of up to 11.7% in 2021. But again, that deceleration to about 4.5% in 2022 because of the global challenges that we have been talking about here. West Africa, East Africa, and Central Africa have all gone back to positive growth after deceleration. To point out there, Eastern Africa did not have a contraction in 2020 because of several policies that they implemented, which you will find in the report. Generally, we see that the macroeconomic fundamentals in many African countries has improved. But challenges still remain. The first of those challenges, the most pressing now, is the debt issue. And the president has already painted the picture for us that we see that tapering in the level of the growth, but of growth in our debt vulnerability and debt ratios as a ratio of our GDP. But we are predicting that it will stabilize still above 70%, above pre-pandemic levels. And the reasons for this are many. Domestic policies that needs to be implemented, public financial management that needs to be improved, but also exogenous shocks that are there that often impact Africa's economies. So this is an issue that we need to look at continuously. But again, we see consumer price inflation coming back into the picture, rising up to like 13.5% in 2020. So these are some of the two main challenges that African countries, from our perspectives as authors of this report, should focus on in the near term.
And the South African Reserve Bank said the risk of spillover of the Russia-Ukraine war could hurt the country's financial stability through rising food and fuel inflation, lower economic growth, and high unemployment. Emerging markets have been impacted by the crisis through increases in the price of oil, gas, wheat, and other grains, forcing central banks to tighten monetary policy, even at the risk of undermining economic growth. In its biannual health check of the financial system, the central bank said that while the financial system of Africa's most advanced economy was resilient, stagflation fears could exacerbate inequality and slow growth. And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Bye for now.